Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
Well, good afternoon and welcome to my podcast. It's been an amazing couple of days. You know, what's interesting, when you listen to these jibber-jabbers on TV, and if you listen to their noise, you only come to one conclusion. This tech rally that we've been having is not what you think it is. And people are going to get stunned. They're going to get surprised. And the environment that we are in now, this is where you really start seeing where you get a separation between the stocks that will survive and the stocks that are going to get crushed. And I'm going to go over those stocks that will survive. I'm going to go over those stocks with you in a moment. But first, you know, the jibber-jabbers are telling us there's good news, that the chip stocks have been rallying despite high yields. Wait a minute. And then they go on and tell us everything's great because they're driven by, all these chip stocks are driven by this by this AI chip memory demand. That's good news, they tell us. And memory prices are exploding. They're going higher and higher. That's all good news. And chips behave more like industrials during these AI booms, which is, they're telling us, is good news. So there's no bad news anywhere. And if you listen to them, you're going to get crushed. You're going to be in that crush phase because none of this is true. And they tell you, well, don't worry. There's only one scenario where high yields hurt the chips. And what do you think that is? Inflation. If inflation's out of control, but inflation's not going to be out of control. There's not going to be a recession. This is what they're telling us. But none of this is true. So let's circle back a little bit. And where did this whole boom start? Well, if you go back to December, I've talked about this many times, we were in a very bad situation. The chip sector, the tech sector was down for anywhere from, some of these chips been down for 90 days or more, some 30, 45 days. It wasn't until December when we had Moo report and we had that one big rally, that big pop. And then January comes in, we had that one big pop. Now remember, before that, they're telling us all the bad things that are going on in this space. And I'm going to go over with you in a minute. But as soon as we had that December rally and then January rally, I think it was last week, 2 weeks ago, I think it was January 17th, everything's fixed. Don't believe it. That's all noise because nothing is fixed. Those two rallies are supposed to fix everything that's wrong in this, underneath this market. There's 7 major cracks in this AI space. And I see, just 2 stocks, 2 booms are supposed to fix that. What are you, nuts? Now, the one thing they won't tell you that's a real problem is one of the major cracks is at the heart. This is the problem, right at the heart of the entire boom space. That's not good, and that is the AI chip supply. This is the heart. This is the blood. This is what keeps this whole space going. But they got a major problem, but they're not going to tell us about it. So the AI chip supply, high bandwidth memory, is tightening. It's not expanding. That's a big problem. I mean, that's this whole space. Without that, the space is dead. And we have other major cracks that the jibber-jabbers aren't going to talk about. They have a problem with the advanced packaging bottlenecks. They have a problem with China blocking the high-end chips. You remember that, NVIDIA. Remember how they blocked NVIDIA? And training is costing 10 times more than the revenue streams on these companies. You saw what happened to Oracle. That's just one company. There's many companies. And the power grid is in trouble. The power grid has these limits and is running out of electricity. Oh, but you don't hear that either, do you? No. And also, the server and the data center equipment is having shortages. And finally, all the valuations on these stocks are nuts. They're priced to perfection. Price, valuations are stretched. You have to trade them, priced to perfection. So that's just a small group of what is underneath this AI boom or bubble, but they're masking it. And they thought those two stocks, just two stocks, would mask all of this. So, but there's other problems. Look what happened on Monday morning after the weekend. Tariff worries are starting to escalate even more. The Supreme Court decision, everybody's worried about that. And Tuesday morning. And Trump, what the hell? He's threatening tariffs on 8 NATO nations. And then England turns around, the UK rather, turns around and says, hey, we're going to retaliate. You can't do that. So the most important thing to remember out of all this chaos that's going on that they don't want you to see, this was exactly what happened during the dot-com days, the same thing. They don't want you to see this. And remember, the whole bubble, this whole fantastic rally is based on a few stocks, just a handful of stocks. So we are in an important situation now. We are in a current environment where we see the stocks. This is where you get a separation of stocks where the ones survive, and I'll go over those with you, and the ones that are going to get crushed. You've got to follow the money. So you make sure the ones that will survive in this bubble, in this AI space, you're in those. And here's the good news. Now, they don't want you to short, remember. Shorting's a terrible thing. You're gonna lose your eyesight. You're going to lose your family. You're going to lose all your money. It's all BS. We know that. They do that purposely so that you'll come in when the markets are collapsing or stock is collapsing, like Enron. They'll convince the tourist traders, hey, why don't you buy on the way down? When the stock's going like Enron, I forgot the number, let's say from 100 down to $3, hey, that's a good deal. If you bought it at 100, it's great at 50, it's great at 60. Keep cost averaging down. You'll be just fine. And people do it because most of the tourist traders, they're like sheep. They just follow. They have a herd mentality. Wall Street knows that. Wall Street knows how to play to that mentality. And that's what's happening right now. People have no idea what's going on. All they hear is AI, wonderful, wonderful, but they don't understand what's underneath it. Now, yes, there's some stocks in AI that you have a good play. You can keep making money on them. I don't know how for long, but as long as we follow the money and money's going in, but the more money, you're going to make more money on shorts, on the ones that are getting crushed. That's where you make your big money. But again, they don't want you to short. Why not? Because remember, the big investment bankers, they control 5 to 6 of the biggest pension funds in the country. And that's where they make all their money. So you have essentially 5 big investment banks, and they take care of the 5 or 6 biggest pension funds. That's where they make all their money. They protect them. And again, when the market starts collapsing or stock starts collapsing, just like Enron, they're going to make sure they get the tourist investors in there to buy on the dips in a severe downtrend. And they think they're doing well because they're telling you, again, if you bought the stock at $80 and now it's $20, boy, aren't you lucky? I'm going to see if I can get you some more shares. And the guy will call and say, hey, you know the stock you bought at 80 is now at 20. I got you some more shares. We can cost average. Oh, gee, that's wonderful, the person will say. So the jibber jabbers have taken parking space in the heads of the, of the tourists. It's gotten very dangerous. And they convinced them that these two stocks have fixed all the problems that are going on, including, okay, all the stress valuation, that's fixed now. Weak profits, that's fixed now. Geopolitical pressures on Venezuela and Enron and Ukraine. Oh, don't worry about that. China, Greenland, we're just fine. But we still have all these other problems. I mean, when you wake up in the morning and you see the news that Trump threatened 8 NATO nations are going to crank up the tariffs, we're going to take over Greenland, all this stuff going on, that disturbs the institutional money. See, institutional money is the smart money. They don't like this kind of nonsense. They don't like the noise. That's not what they follow. They follow the money. And a lot of the money is rotating now out of these stocks except for a couple. So let's go to some stocks, and I'll show you what I'm talking about. Let's flip over here. So the stocks that we've been in, okay, just for an example, the biggest profits that we've been making, okay, since January 2025, of course, is our gold stocks and our metal stocks. Okay, our GDX, our miners, they've been doing fantastic. Now remember, if you're in the miners or any of these gold stocks, make sure you understand we constantly get these pullbacks of 3 to 6%. It's almost like clockwork. So when you get a big rally, you sell in, take some profits, put in your pocket, reset your stops, and as long as you continue to get these little pullbacks, 3 to 6%, and as long as each pullback is higher than the previous one, you're going to be just fine. Watch your volume. Now as far as Micron, that thing, everybody and their brother's in there. We're in there. So that thing just keeps going up and up and up. That's the one you got to be careful of. That's the one you got to take profits, set your stops in. And also, if you take our copper, our Barrick Gold, we're making all kinds of money with these stocks. GDX, MOVE, FCX, Barrick. We're making money with POS. We're making money with Honeywell. And you have the best opportunity in the chip sector right now, remember, is the machines, the equipment makers, the people who make the machine to sell to Micron and Intel so they can make chips. They make the machine. And they have a lot of relative strength. When this market went down 800 points, we found stocks like ASML. Nice stock. Very good relative strength. It's always about relative strength. It's a blessing when you get a big down day and the plunger team doesn't come in and screw with it and push it right back up. So ASML didn't go down. We're doing terrific with that. We're doing terrific with AMAT. We're doing terrific with LRCX. We're doing terrific with CLAC. Those make the machines. That's where you want to be, right there. That's where you want to be with maybe Micron technology, okay? And you want to stay with your gold. You want to stay with your metals, okay? Industrials have been doing well for us. Our Caterpillar, our Honeywell. These are all relative strength stocks. These are stocks when the market went down 800 points, they didn't go down. That's smart money. That's how the institutions buy. That's how we buy here at Phil's Gang. Now, the other thing, now again, the defense contracts, we've been doing great with NOC, okay? Northrop, we've been doing great with Lockheed Martin. Those are all relative strength stocks. So again, you know, the flip side, when you know how to sell short, we're going to be making more money on shorting CRM. Great short there. We have a great short in MGM, great short in Apple, MRVL, BAC, JP Morgan, COF. So again, when you have the skill to short as well as go long, and you don't listen to the noise, you follow the money. Always follow the money, especially the key is on down days. When you get these big down days like that 800-point drop and the plunger team didn't come in, remember the other day we had like a 600-700-point drop and I said we're going to turn positive? and we did. Those are the days when, again, the plunger team comes in, interferes with the market, screws things up. But if you know how to follow relative strength, you know how to sell short, you know how to go long, you'll always be making money on the upside or downside. It's when you don't know how to short, you get screwed. See you on the charts. philsgang.com. Sign up free for 10 days.
Are you nuts?